Hi everyone, welcome back to episode 18 of my Stuarts blog. This is the economy part 2, and in this episode I'm going to be considering London and the growth of banking and insurance and how they contribute to the growth of the domestic, as in the English-based economy in the Stuart era. So first of all, let's start with London. Fairly obviously, it's by far the biggest city, biggest settlement in the whole of Britain, let alone England. And in fact, by 1650, it was the largest in Western Europe. It had around 400,000 inhabitants at that point, and had grown to over 500,000 by 1700. I think 575,000 by 1700. And that was largely because of migration, people moving into London because there were more deaths than births there. So it's not about just more babies being born in London. It's actually about more people moving in. Lots of reasons for people moving in. The first sort of batch would be that there are greater job opportunities there. If you're poor, then there's quite a few jobs in trade there, and particularly in domestic service. So if you're some of those people having to move off the land, then London was an obvious place to go. If you're wealthier, it's the place where the royal court is. It's the place where the inns of court are, the centre of the legal system. It's where the admiralty is if you want to get involved in the navy. And also, it's the centre, as we'll consider later on, of the banking and investment and of course overseas trade, all taking place or based in London and moving out from there. So there are significant draws in for both gentry and also for lower class people. The other reason for the growth of London is because of the growth of trade, and I would say this is probably a bigger reason. It's kind of almost a stimulus in itself. It's the centre physically of the road network, less physically of the river network, but navigations lead to London, and stuff was brought down from the north down the coast to London as well. So it's kind of like really well based for all those things, and because of that, it tends to dominate the market, certainly initially of the southeast, and then by the mid 17th century, it sets the prices nationally for things like livestock, grain and cloth, and other things. Well, I think cheese is one of the things that kind of gets its national prices set by London. So it's really kind of dominating it, and therefore it allows agriculture to start to specialise, because the trade in goods is that much more kind of fluid across the nation. So London isn't just, the growth of London isn't just about the impact on London itself, but also the impact it has upon the England, probably not Wales and Scotland so much, but certainly on the economy of England. And there are also overseas companies or companies that trade overseas based in London, and we shouldn't discount them, and of course London's impact upon them. So the East India Company, which was founded in 1600, the Levant Company, Levant is Levant, started in 1581, and the Muscovy Company, trading around the north to Moscow in the Baltic, which was founded in 1555. Muscovy is spelled Muscovy. And by 1688, London was so important that it was actually kind of the hub of European trade. So that sort of fits in with its with the growth of England as a naval power and the rivalry with the Dutch, but also emphasises London's growing and kind of exponentially growing importance. So that's London. We'll come back to its importance relative to the others at the end. And the second and third areas are banking and insurance, which you can kind of cluster together if you want, or see them as separate things. When we're talking about banking, we're talking about there's actually very limited private banking at this time. So we're really talking about business banking or investment banking. That is banking in order to lend money to people for business purposes, rather than you or I taking money along to put on deposit with them. These tend to be kind of in, and so there's very few actual kind of banks that we would recognise them. Money scriveners are the kind of the first group of people to start kind of a banking trade, almost kind of brokering, taking money from one person and lending it to another person, or scraping money together from a few people and lending it to particular individuals. And the first money scrivening firm, as you probably know, was established by Robert Abbott in 1636. By the 1650s, he was flourishing, not least because he was looking after or looking out for a number of royalists who were having their lands confiscated or fines, and he was kind of taking money again from one and giving it to another, lending it to people in order to help them through those hard times. He was so successful that between 1652 and 1655, £1.1 million passes through his accounts. He's not making that money, but it's passing through his accounts. When he died, he handed his company over to Robert Clayton, his nephew, who by 1672 was earning £3,500 a year just out of interest. So interest payments alone. In 1659, Robert Clayton and his accomplice, John Morris, wrote the first cheque, which was, we don't really use cheques anymore, in fact, kind of like almost like a debit card, I guess, for a specific amount. That it's like a promissory note. You write a note saying, I will pay so-and-so this amount of money, I guarantee to have it, and you hand it over. So the first cheque. Cheque is spelled C-H-E-Q-U-E. As well as money scriveners, there were also goldsmith bankers. Now, these are goldsmiths, basically, but goldsmiths, of course, have very safe places where they keep their gold and the things that they've made. And they started to be able to use them as well to keep people's money or valuables themselves. And so they'd charge a little bit of interest for that and make themselves some money on the side. And they were also allowed to take some of that money that they were keeping safe and lend it out to other people. So they start to operate really as banks, really. That's why they're called goldsmith bankers. It makes sense, doesn't it? People look to goldsmith bankers increasingly as the century goes on because of the shenanigans of the royal family. In 1640, Charles I seized the royal mint. And so people who had deposited money with the royal mint lost that. And that again happens in 1672. No, it doesn't. In the slightest. In 1672, Charles II actually takes money that the goldsmith bankers had loaned him and says, I'm not giving that back. And that really undermines the goldsmith bankers and the whole banking industry for a bit, until William III pays all that money back in 1688, but it certainly causes some unrest. That said, the number of goldsmith bankers increases from 32 in London, just in London, there's 32 in 1670 through to 44 in 1677. So they were a relatively significant group of individuals who were able to lend money out and played quite a key role. So that's banking. Finally, insurance. Insurance, there are two sort of strands of insurance here: the marine insurance and the fire insurance. Marine insurance by far the more important. Marine insurance has been known about in London since the 15th century, but even by our period and until really after our period, after 1688, it's not really an industry as such, even though insurance is happening. So people are buying insurance and spreading the risk on the whole. However, in the first part of our century, up to sort of 1650, premiums are very high. It's a very costly thing to do, and so people are either not insuring. The East India Company is an example of a company that didn't insure. It thought it kind of had enough money to cope with the risk of losing a ship or two, or they would insure part of the goods of a ship, so they'd insure kind of half of the wealth of it. So they're sort of alleviating some of the risk. However, we know that insurance was going on. In 1601, law set up the Assurance Court in London to deal with insurance claims. And by 1657, it was certainly becoming a lot more normal, and English brokers were being used to sort out insurance for Dutch ships. So it's kind of a growing European trade there. In the second half of the century, because of that, premiums dropped by up to 75%. It became much more common and much more affordable to insure your ships. And by the end of our period, as I say, it's becoming more of an industry. So in 1688, again, as you're probably aware, Edward Lloyd opens his coffee house with the explicit intention of attracting insurers and sort of creating, where he does create, in fact, the world's first insurance market, where people go for advice on insurance and to meet several insurers and to try and get the best deal. And they also find out about weather forecasts and shipping news and stuff like that as well. So it's kind of like a hub really for that sort of thing. Finally, very quickly, fire insurance. Fire insurance is really quite a small part of the insurance scene at this time. It had, well, we know actually there were fire insurers around. In 1615, there's a chap called Mr. Havers. This is before our course, but he was an assurer of fire insurance. And his estate was worth £40,000. He's clearly done pretty well. Maybe not all out of fire insurance, but he'd done pretty well. In 1627, an office in the Royal Exchange was set up to deal with ship and fire insurance claims. In 1638, Charles I had the idea of setting up a scheme for fire insurance in London, but oops, didn't do it, probably because of the Civil War. And therefore, the Great Fire of London happens, and most people are uninsured. After that, though, in 1667, an act is passed for the rebuilding of London, and in that act, it talks about the settling of fire insurance claims at the Royal Exchange. So clearly, some people had some measure of fire insurance. By the end of our period in 1681 and 1683, two specialist companies had been set up, the Fire Office in 1681 and the Friendly Society in 1683. So it was starting to happen, but it's not really until the following century that things get going with fire insurance. So briefly now at the end, we're thinking about the domestic economy, the economy in England. What is the greatest stimulus to it improving? And whether that's agriculture or cloth or London or banking and insurance. And if you're going to argue London or the banking and insurance, I would suggest that there are probably two ways in which you'd do that. Firstly, London. If you want to argue that London is the greatest, then you really want to see it as the stimulus of other things, particularly in terms of agriculture. In fact, the relationship of agriculture is quite interesting, isn't it? Agriculture has to be doing well for London to be able to exist. It can't expand unless the people can be fed. On the other hand, it's only as there's a growing market of people in London asking for food to be grown for them and buying that food off agriculture that there's any incentive on agriculture to expand and become more efficient and more effective. So no market, no need to farm more, and I would say that's the key to the London. And likewise, London is the hub, the trading hub, out of which flow the cloth trade. So as the cloth trade grows, and particularly the export cloth, that is due to London being a bigger trading venue. Secondly, then banking and insurance. Banking insurance is a tough sell because it's really quite a small thing at this time. But I would go back to the banking and say, even though it's small, it is that new investment in agriculture, in the new draperies, in cloth, that really stimulates the growth and change in those sectors of industry. And that can't happen without the investment of money. And that investment of money comes through money scriveners and the Goldsmith bankers. And therefore, banking insurance, even though it's small, is certainly stimulating economic growth in part. I do find them a bit less convincing, so if that helps you rank them at all. But that's where I would go if I was going to argue them. Right, good. Next time we'll be thinking about the overseas economy, or starting to think about that. We'll probably take 2 episodes of that too. See you then. Bye.